I want to demonstrate some of the features from the front page, the market location page of Swing Master Chartist, Option Master Chartist. And we're going to cover this bottom panel, or part of this bottom panel now. And the list I'm using today is a list of only ETFs. These are all ETFs. And some of them are good tradables, some are not, but making a list of ETFs is valuable in that you can do analysis on it, and if you find something interesting, what looks like a good buy or sell coming up, then you can go to the components and find out individual stocks within it if you don't want to trade the ETF. But not all ETFs are liquid enough to trade, particularly the options. But what I did was I ran a MACD histogram cross, and we only had one ETF come up as overbought, and that was VNQ, which is the REIT ETF. And what we're going to do is we're going to look at some of the features on the bottom of the page. And we're going to start over here on the right. This is historical volatility. And volatility is a measure of the change in price from day to day. And if you click with the left click, if you click on the historical volatility chart, we see that the historical volatility today for VNQ is 17.1%. And what that means is that over the course of a year, VNQ is expected, based on the current volatility, to increase by 17.1% or decrease by 17.1%. Now, volatility changes every day. I mean, every new close brings a potential change in the volatility. But what this distribution chart tells you, it shows you where 17.1% is based on a high of the available data of 25.3 and a low of 5.3. So if it's at the high end here, say we're at 25.3, then you can't really expect it to continue. It's going to revert to the mean. It's going to eventually head for the areas that it's most likely to fall in. And you can just quickly see here that's between, say, 10.5 and 15. So we're even a tad high now. But why is that useful? Well, if we jump over to the left side of the bottom panel, we see HV range, and what this little panel here is doing, it's using today's historical volatility to give us an upper and a lower price projection for VNQ based on its historical volatility. And we can see that 20 days out, it would expect VNQ to get as high as 85.60 or as low as 79.02. And we can see at the top of the chart here that its current price is 82.31. So if you're trading options or just trying to plan a trade in general, you can use these numbers to build spreads or to do a quick computation of risk reward. Now, if you don't want to use historical volatility and you wanted to use options implied volatility, you click on the 5 days label here. It has a little rose-colored background. If you click on that, it'll bring up this little panel, and you want to put in the current stock price, which is 82.31. Whoops, 82.31. And you want to put in volatility percent. And for implied volatility, option implied volatility, if you don't have it on your broker platform, you can get it at Yahoo, but I think the best source is ivolatility.com. And you can sign up for a free account, and all you do is you enter the symbol here, VNQ, click go, and it brings you to this panel. And we can see that implied volatility is 16.35, which in this case is not much different from the historical volatility. So we'll enter 16.35 in here. And we want to project it, we'll use 20 days ahead. And you click calculate. And this gives you what's called the market maker's move. It's 3.15 points. And if you add 3.15 to the current price, you get 85.46. Subtract 3.15, you get 29 or 79.16. Now the other thing you can do with this little panel is you can put in the 1 standard deviation expected move and place it on the chart. And when you click the place on chart, it'll pop up this little button. And this is putting in visual form the expected range for VNQ at the current options implied volatility for 20 trading days. So this is very useful. And the other little figure that you get on here is liquidity. And if the underlying trades more than 4 million shares a day, it'll appear in green. But most often, if you have more than 4 million shares a day, you can get some decent liquidity in the options, or at least get enough good strikes and expiration dates to make a trade. Okay, now we'll move over to the left to the historical ATR. And ATR is average true range, and it uses the high-low of the prior 2 days to figure what Wells Wilder called the average true range. And again, if you click on here on the average true range chart, the average true range for today is 1.27, and that'll show us the ATR distribution, so we can see where it sits in relation to the most frequently derived ATR calculations. And here it's a tad high. But ATR is a measure of volatility. And when it's really high, that's a good time to be selling options, because it's probably going to come in and, protect your purchase or your sell level. But this gives us a good indication of where ATR is, what the current volatility of the stock is, and what we can expect in the near future. Okay, we're going to jump one panel to the left, the middle panel here, and this shows what I call trendiness. And we're really only going to cover the 2 little items on the top here. Each of these is a subchart, each of which requires its own explanation, and that would make this recording too long, so I don't want to do that. We'll do that at another time. But what these 2 red numbers are, in this case they're red, it's called T-score, that's the technical score, and P-rel, price relative. And the technical score is similar in many ways to the stock chart's technical score, and that I used a lot of the same factors, but these are absolute scores, not relative to other symbols in any other list. And just generally, a +7 is bullish, very bullish. A -7 is very bearish. But we're a -3, which is somewhat bearish. Now the next number, the P-rel, the price relative, or the percent relative, it compares the symbol VNQ to a virtual instrument that produces exactly 1% per annum return. So VNQ compared to a 1% per annum gainer is a -17% loser. So it's 17% worse than a 1% gainer. But these 2 little numbers give you a a good reference point when you compare VNQ or the symbol on the chart to any other symbol in your lists. Okay, we're going to jump over one to the left here, and this is the little momentum panel. And the top line is RSI, and then there's an A/R. And what that means, it's RSI actual. That's the actual calculation of RSI for the symbol. And right now it's 45. And R is RSI relative. And rather than the absolute calculation, it compares today's RSI calculation to the history of this symbol with the available data and places it relative. So the actual is 45, the relative is 41. They're usually going to be fairly close, but RSI can be deceptive when you look at different RSI numbers for different symbols. And to the right of that, there are 3 minus signs. That means for the last 3 bars that RSI has been declining. And you read left to right like a book. The next line down is RSI 3.3, and that's a short-term RSI, and it just gives the absolute number, in this case 33. Now, in bull markets, RSI usually functions between 40 and 70, and in bear markets between, say, 60 and 30. VNQ generally has been trending down, so it's on the lower end of the range. But even when the short-term RSI and the long-term, which happens less often, when the short-term RSI is 30 or less, you can often expect a bounce. And when it's 70 or more, depending on whether the symbol is in an uptrend or a downtrend, you can expect a stall or even a retracement. And there's 3 minus signs, reading left to right. The last 3 bars have each been negative. The next line is MFI, that's Money Flow Index. And Money Flow Index is an oscillator that measures whether money is flowing into a symbol or flowing out. And it reads much like RSI, say between 30 and 70. So you can get a gauge of whether a stock or a symbol is under accumulation or distribution. 61 means this thing is not being sold. It's not being liquidated. But we can see the last 3 bars have each been negative. The next line is CCI, that's the Commodity Channel Index. And the Commodity Channel Index is one of the most useful overbought, oversold indicators. When it's plus 100 or higher, it's in an oversold territory. And when it's minus 100 or lower, that's the oversold territory. Plus 100 or higher is overbought territory. And with oversold, overbought indicators or bound oscillators of any type, including stochastics and RSI, the only times they're really important is when the indicator enters the oversold or overbought zone and when it leaves it. While it's in it, it's interesting, but it's not critical information. Because I know sometimes you hear, well, when CCI gets to plus 100, it's time to sell, or when RSI hits 70, it's overbought, it's time to sell. That's not true. It takes a lot of energy to get to a 70 plus RSI, a plus 100 CCI, or a plus 70 MFI, and you would actually expect the symbol to keep gaining in price while it's in that overbought area until the energy dissipates, and you'll know that happens when the price starts dropping out. Okay, that's a review of the bottom panel on the market location page, and I think there's some good information in there. It's handy, you can't get anywhere else. And don't forget that Swing Master Chartist, Option Master Chartist isn't intended to replace your TradeStation or your Ninja Trader or your Thinkorswim. It's a complement to it. It's going to provide things that they don't have, or that you have to pay extra to get, that you can access very quickly. Okay, I hope you found this useful.